Hello, chart watchers, and welcome to this Friday, January 18th, 2019 Market Watchers Live show with your hosts, Tom Bowley and Mary Ellen McGonagle. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Market off to another strong day today. The Dow Jones Industrial Average currently up 331 points. The S&P 500 up 37. The NASDAQ up 91. And the Russell 2000 up 15. Very strong action. 10-year Treasury yield up 4 basis points, clearing a lot of those levels that we talked about in terms of yield resistance, up at 2.79%. Volatility index continuing to drop down 4.4% today, back near 17.25. The XLI industrials leading the action today. Materials also strong. Really, it's across the board, but the top industry groups or top sectors: industrials, materials, energy, and financials. Couple of big reports that came out after the bell yesterday. Netflix and American Express, both were a little challenging in their own different ways, but both holding up fairly well. Netflix was down quite a bit after the close yesterday, but it did open near break even before seeing a little bit of weakness today. American Express missed on, I believe, both revenues and earnings per share. You can see the stock was down earlier, but now it has recovered, trading at a 1-month high. So really solid recovery. And this is what we've been seeing in the market overall the past few weeks. The market has been ignoring bad news. We continue moving higher. Really, the only bad day, Mary Ellen, when we look back over the last 3 or 4 weeks, the only bad day that the market has had was the day that Apple came out with that warning. Otherwise, we've been shaking off a lot of bad news, just keep moving higher.
I totally agree. It's really indicative of a market that wants to go higher. And we are getting very good marks on the volume side. So it indicates institutions are in here supporting it. So, and a lot of positive signals are flashing. We'll probably get into that as we move along, but it's pretty dynamic out there.
Yeah, I had a few levels back when the VIX hit 36, and that was kind of a moment where we were getting a washout. I mean, usually when you get the VIX up that high of reading, you're printing a pretty significant bottom. Now, at the time, I was not thinking that was a long-term bottom, and I'm not ready to make that call just yet. But since we bounced, there were really 3 levels that I was looking for. I don't know, if you had looked at it to see what you were expecting, but I looked at the intraday low on the S&P 500 back in, I think that was back in February, 2532. We had 2 closing lows, both at 2581, one in early February, the other one in early April. And so both of those levels, I thought on the way back up, broken support becomes resistance. I thought maybe we'd have some issues there. And then finally, the 20-week EMA, which during bear markets, we really struggle to get above those levels. So if you're, and we've all been talking about the possibility, or not the possibility, the fact that we are in a bear market. The only question, I guess, is whether or not we're done with the selling. But that 20-week moving average is important. And right now, I just saw the S&P with that move through 2670. We're above that 20-week moving average right now. So it's hard to be bearish at this point.
It is an interesting point that you would bring up, because not everyone is calling this a bear market. There's definite, it's not a vocal camp, one or the other, but it's interesting that not everyone is recognizing that. There are those that are saying the S&P did not go down more than 20%. They're sticking to that number, that percent decline, and saying that we're still in that bull market.
I thought we did go down more than 20% on the S&P.
I 19.8. I saw that print yesterday.
Really?
Yeah.
How did I not know that? How did
I don't know what math they're using. It might be a new math.
Yeah. Now I'm curious. Now I'm gonna have to check it out. All right, we were at 2940, so that would be 588 points, which would take us down to 2352, and we went below 2352. We got down to 2346. So my calculation that we've gone more than 20%. Anyhow, I'm one of those nerds. I'm a CPA, so numbers.
They're important.
Yeah, I wasn't going to be able to let that one go. I had to take a look at it.
There'd be no rest.
Yeah, that's for sure. All right, well, let's get into it. So we got a lot going on. I know you're back to do the what's hot, what's not. There's a lot of what's hot, so we want to make sure you have plenty of time to get through all of that.
Sure.
We got upcoming schedule. Just a quick reminder, Martin Luther King Day on Monday. So financial markets are closed. So we will not be here. No live shows on StockCharts TV, but we will be back on Tuesday. We had posted previously that Aaron was going to be doing a workshop, but last minute, Aaron is not going to be with us on Tuesday. So what I'm going to do is I'm going to do the January effect. And if you're not familiar with the January effect, basically there's a saying on Wall Street, as January goes, so goes the rest of the year. I saw an article recently by Mark Halbert of Halbert Financial Digest. And generally, I think, most of the information that he writes about is pretty interesting and usually spot on. But he wrote an article recently about the January effect not really being what it's cracked up to be. And I completely disagree with him. And I'm going to go over the January effect on Tuesday, and we'll talk about that. Arthur Hill is going to be joining us next Thursday. So we have got ourselves quite a week lined up next week, even with the holiday. So let's talk about what we're going to be doing today. Of course, what's hot, what's not. Mary Ellen is back, and she's going to go through some of the things maybe you should be thinking about or looking at. We'll get into the 10 in 10. Applied Materials trying to make a breakout I saw earlier today, AMAT. So that'll be an interesting stock to take a look at. And then finally, we're going to end with a new segment, Tis the Season. And essentially what I'm going to do, I wrote an article 2 days ago about 10 S&P 500 companies that tend to perform really well February through April. And of course, we're getting close to February. So I thought maybe I would give the seasonal argument why you might consider these stocks. And I'm going to have Mary Ellen take a look technically and tell me what she thinks, along with some of her fundamental information, all that great information she gives us from time to time. So I think that'll be a fun segment at the end of the show. All right, let's get into this. We did have some quite a bit of technical news today. Let's start with the key economic reports. December industrial production came in just about as expected. Rose 0.3%, exactly what the market was calling for. And capacity utilization came in a little bit higher than expected, 78.7% versus 78.4%. And then finally, a disappointing January consumer sentiment report out at 10 a.m. this morning, 90.7 versus 97.0. And I had to go back and make sure that wasn't some kind of a transposition with those numbers. But no, it was 90.7 versus 97.0, so a little shortfall there. You'd never know it, though, looking at the market. Let's first take a look at what's going on in the Treasury market. And this is helping to fuel the stock market rise. No doubt about it, in my opinion. We are getting a breakout above the 20-day moving average on the TNX. And anytime we got the yield rising like this, 4 basis points, tells us there's a lot of selling going on in the defensive Treasury market. And I don't know if you've looked at the sector leaderboard today, but that's painting the same picture. The groups at the bottom are defensive. Groups at the top are more aggressive. So this is a pretty good day so far. Now, what I would be careful about is if we have a major reversal. That would be the one thing that would make me a little nervous about this, because we are hitting those 20-week moving averages on the major indices. We'll talk about that in just a second. But that is something at least to keep in mind as we go forward. This is a nice breakout on the 10-year Treasury yield, and I think adds to the bullishness in U.S. stocks, but we don't want to see reversals. So keep that in mind. All right, we got a lot of earnings reports out. Last night after the bell, we saw Netflix and American Express come out with their reports. Actually, J.B. Hunt Transport also out last night. You can see 2 of the 3 bottom lines very strong. Netflix and JBHT both beat handily on the bottom line. American Express, not so much. And American Express did come up short on revenues, as did Netflix. That was one thing that was maybe a little disappointing to traders, and the reason Netflix traded down after hours yesterday. They came up with the revenues, $4.19 billion. Market was expecting $4.21 billion. And we kind of, improved throughout the morning. Netflix opened fairly stable, and then we've seen some selling. Other reports there, they were out this morning. Schlumberger, Met Expectations, VF Corp, a very strong report there, a nice reaction. State Street, SunTrust Banks both came in a little better than expected there. So let's pull up some of these charts, and I'm going to start with the Netflix chart. Obviously, that was the big one. So let me get you that chart up. And here it is. Now you can see we actually held on to the recent, this is one thing that we were talking about on the show yesterday. Aaron mentioned that it looks like maybe a island top, but you need that gap down to confirm an island cluster reversal. Here was your gap up, sideways action, a big gap down, which is what it looked like we were going to have last night, would have signaled a potential top on Netflix, but we did rally, opened up in the middle of this cluster, came back down, maybe getting close to filling this gap support level, and now back up again. I think overall, Netflix here handling the news pretty well, considering that they did miss on their revenues. AXP, American Express. This one missed the top line, $10.47 billion versus $10.54 billion. Missed the bottom line, $1.74 versus $1.80. The stock was down more than $3 earlier today, but like so many other stocks, rebounding here. Now back up over 100. It's up on the session despite missing top and bottom line. That is something to at least consider. Now, when I look across here, I do see the breakdown that came in around 101. So while we are getting a nice reversal, we still have a little bit of technical work to do to get through resistance on AXP. JBHT, this is JB Hunt Transport. And I've been a little concerned that transports haven't really performed as well on this rebound as some other areas of the market, but that is not holding back JBHT today. They did beat on the top line. They blew away their bottom line, $1.77 versus $1.48. Getting that nice move back to the upside. Looks to me like this downtrend is broken, unless we have a lot of selling later today. Looks to me like a breakout on some pretty solid volume here. Schlumberger, SLB, big gap up here. They did beat on the top line, $8.18 billion versus $8.10 billion. Bottom line, they matched expectations, and they're acting bullish. They broke through the 20-day moving average. They held it on the pullback, and now they're gapping up with earnings, clearing that 50-day moving average. Check out the PPO on a daily basis, rising above the center line. Now, one thing I think we have to pay somewhat, we have to pay some serious attention to, though, is those longer-term weekly charts when you're in a bear market. So if I take a look at SLB and we pull up the weekly chart, this rally looks nice, but we were really, really oversold on the weekly chart, and we still got overhead resistance at that 20-week moving average, something that I think is worth keeping in mind as we go forward. For those of you who are convinced that this is a bear market and this is nothing more than a bear market rally, those 20-week EMAs tend to provide some pretty solid resistance, so we'll see whether or not the overall market can make the breakout at the end of the day. VFC, VF Corp did beat top line, easily beat bottom line, very similar to JBHT in the fact clear downtrend in play, but this gap up, heavy volume seems to be breaking it back to the upside. STT, this is State Street, really nice gap up, continuing what's been a strong week for many banks. Gapped up, went back, filled the gap. I would expect it to go higher. We've seen a number of the banks pull back after reporting earnings, only to rebound after that. STI, which is SunTrust, also reported. They came up they just met expectations on the top line, but they easily beat on the bottom line, $1.50 versus $1.40, and we are all the way back up here to where a lot of that selling began in early December. So SunTrust has a little bit of overhead resistance, but otherwise looking pretty good here on the daily chart. One other stock I wanted to mention, or actually a couple here. One is Team Atlassian Corp. This is a software company. Stock gapped up to a new high at the open. Great numbers. Big beat on the top line, $299 million versus $288.3 million. Big beat on the bottom line, 25 cents versus 21 cents. They guided their third quarter revenue higher, and they guided fiscal year 19 revenues and earnings per share higher. Stock gapped up, pulled back, looked pretty weak, but it is rebounding again. I wouldn't be surprised to see this one continue to strengthen. If it doesn't, that's going to be a pretty ominous looking candle on this kind of volume. We'll have to see how it closes today. Strong finish bullish. A finish where we are now or lower, in my opinion, would be a bearish. It would be suggesting a lot of sellers coming in at the open. Last one I wanted to mention, this was a stock that I had as my Monday setup a couple of weeks ago, NLS, Nautilus. And I was really looking for this to hold at the 20-day moving average. We went back up, and this will just show you how frustrating the market can be. It did break above the 20. I didn't short it. Had I shorted it, this would have probably been a cover. I would have had no choice probably but to cover on that move to the upside. Today they warned on the quarter four. Look at the stock down 38% today. So I think that the technicals do provide you some nice signals, but they do not provide you guarantees on exactly when to enter or when to exit. So last thing I'm going to show you, and then I want to turn it over to Mary Ellen, who's going to talk a little bit about this earnings season. But on the S&P 500, I just want to show you that currently we are now trading above that 20-week, which is at 2669. We're at 2673. So a reversal would leave a tail above that 20-week moving average. Just something to keep in mind from a bearish perspective. You want to just jump right into the what's hot, what's not?
Yeah, that sounds wonderful. Super. So let me
Okay,
go.
why don't you go ahead and take it away?
Within the broader markets, we're seeing a lot of reaction to earnings. And I was all set to go ahead and review a little bit of that earlier. But the fact is that the biggest movers on the upside this week are within those stocks that are reporting earnings that are coming in ahead of estimates. And quite frankly, realistically, the markets have really put the earnings estimates down for a lot of stocks. And so their beats are kind of easy. The biggest mover within the financial sector is up 4.3% this week, and the biggest mover is Goldman Sachs. And the stock is up 12% for the week, and they reported earnings and revenues that were ahead of estimates. And the gain really is due to a lot in the way of cheap valuations. And they did come in, their banking and advisory fees came in ahead of estimates. They also have a consumer banking arm. It's called Marcus, and they're seeing considerable growth there. So that's really helping the company. Another big, certainly in the financial space, Bank of America, they came in earlier with this week with earnings. They're up almost 11% on the week. This company saw 7 negative earnings estimate revisions going into earnings, but you can see the stock really fell in line with those earnings estimates being declined. And more recently, the company is citing a lot in the way of loan growth, both corporate and personal, and also cost cutting really helped them come in ahead of estimates. Citi C is another one. They did have mixed results, but again, that really depressed valuation. You look at how cheap the stock got, and the markets were able to kind of look a little bit the other way. The stock was up 14% for the week. And a couple of other, certainly a lot of other banks were up for the week. We can take a quick peek at CMA. That's another company that came in with mixed. They did see loan growth, but they also saw lower deposit growth. But their earnings, 52% year over year earnings growth. And we can see the nice stock advance since then. A lot of these stocks really look like they could have more in the way of upside advance. And that has everything to do with the fact that they, again, were so depressed in their pricing. They fell quite a bit. Certainly last year, they were the first group to go into bear market territory. And one other group stock here we can take a look at is Charles Schwab, SCHW. And this particular company, again, they did come out with earnings. We can see that nice gap up there on Wednesday. They saw a rise in their interest income as well as their trading revenues. And this is something worth noting because we can expect to see that potentially in some of these other platforms that provide trading for self-directed investors, so maybe an E-Trade and so forth, because what we saw last quarter was quite a bit, and certainly last year, in volatility, which really increased the trading activity with these companies. So we saw a lot of the revenue rise because trading revenues are up. And then one last one in the financials is Lending Tree, TREE. And this particular company, they are really doing a lot. They actually are expanding their product line. So that has a lot to do with the advance that we're seeing on this stock. They are expanding, their big product line is mortgage lending. And what they've done is they've been out doing a lot in the way of merging and purchasing other companies because they're expanding their product line into insurance. And that really has a lot of analysts super excited. The stock was up 23% or more since the announcement of these purchases.
Hey, Mary Ellen.
Yes.
You know, with these moves that we're showing on the screen here with Goldman Sachs, Citigroup, Bank of America, Lending Tree, CMA, and so forth, I mean, they're so stretched. So if you were out of the market because you were concerned about the bear market, now all of a sudden a lot of these are looking so much better technically. Would you be inclined to jump into this strength, or because a lot of these stocks now are quite a bit overbought, or would you just simply say, listen, I have to wait for a pullback and try and get them a little bit cheaper? I mean, what's the strategy for entry into a lot of these stocks that have made such big moves?
That's actually a really good question, because what we are seeing with this turnaround, this downtrend reversal, we can take a look at Goldman or any number of those stocks that we've just reviewed. And what I like to see, I know I've talked about this in the past, is that spike up above that 50-day simple moving average. Thank you, Tom. And we can see that we did in fact see that, but take a look at the volume bar on that down there. And that's telling you, and really surpasses anything that you saw for a good part of last year. Again, institutions are in there. They like the numbers. They're supporting the stock. So that is the type of volume action that will propel the stock higher. Now, I like to put a 200-day simple moving average, because that could be your next potential upside resistance. So I would look to that as a rally on the upside. And we can see 220 on Goldman. And you're going to want to pay attention, because if you go back to September, May, a lot of other times when Goldman and a lot of these other financials tried to reverse, you can see the clear-cut resistance at that 200-day simple moving average. So that's going to be your next possible upside resistance. But I would say over the near term, there's still more upside. There's a lot of talk as far as financially that they're still relatively cheap, certainly relative to historical valuations.
All right, well, moving on, because I know you had some consumer discretionary stocks also that had been doing pretty well. What do you like there? What's been hot there?
Yeah, consumer discretionary has really been strong. And what we are seeing in line, we're seeing a move back to selective areas within consumer discretionary. And it's a move back to those stocks that not only performed well last year, but are putting up good estimates and earnings prognoses for this year. We can take a look at Lulu, LULU. The stock is up 10%. The big move here is management came out earlier this week and they guided their earnings estimates higher for this year. And of course, the market loves it. The stock is up again 4% today. It's a real winner. So they had a good holiday season and are banking on that continuing throughout this year. Another move, ETSY, is another stock in this space. And these guys provide a platform for those that I don't want to say crafts, it's better than that, but they do provide a sales platform for those that produce products. And the stock is up 5% and even more, actually. It's probably about 8% for the week. And this is another stock. Take a look at June, that gap up. We can see a gap up in the stock price in March. And that has everything to do with their earnings reports. And the markets love, they're coming in strong earnings ahead of estimates, and then management increase their fee structure to those that use their products. So that really is helping to boost the stock. And then one last one we can look at, DLA. This is a company that they pre-announced yesterday, actually, their quarterly earnings for Q1 19, and they very positively pre-announced they have a new product line, a new company that they launched that's doing really well. They do beachwear. So this is not my favorite stock. You can see the volatility and it's very low volume, but certainly worth noting that the markets are still rewarding companies that are pre-announcing positively and guiding higher.
Yeah, I'd say looking at this chart, first of all, I think your point about the low volume certainly is well taken, because I don't like trading illiquid stocks, and this one has only traded 7,000 shares today. So clearly not a stock, if you're looking for liquidity, not one you'd be interested in. But technically, there have definitely been a lot of tops between 20 and 20 and a half, and we just tested this 20 and a half area the last 2 days. So a breakout there, I think, would be significant. But again, the volume would probably make me nervous anyway.
Right.
All right. Well, let's move on to technology. No, we can't get away from what's hot without talking about some technology stocks. What do you have there?
Oh, absolutely. Yeah. So we can take a look at certainly an area that, again, was super strong last year, and there were sound reasons. That's going to be your software. The first stock we can look at is SHOP as an example, but really that software space is littered with companies that are doing really quite well. This had 126% earnings growth in 2019, SHOP, and the company provides a cloud-based e-commerce platform for smaller and medium-sized companies, and the estimates are being revised upward
So the stock was up about 6% for the week. Another one that I like even better is VEEV. This is Viva. And this particular company, they provide cloud-based sales and marketing for healthcare, life sciences, biotech. And the stock is up about 8% for the week. But the estimates, we're looking at potential 67% earnings growth for 2019, which is very constructive. But take a look how the stock is today, breaking out of a long-term base. So we can go from mid-September to mid where we are now. And that is showing you that the stock is emerging out of a very long-term base. And I'll tell you that the longer your base, studies have shown, the longer your advance out of that base potentially. So if we break out today and get any decent volume, that would be wonderful.
I see a stock like this, Viva Systems. I remember when this earnings report came out here, I said at the time it was one of the strongest earnings reports that quarter that I had seen. And we did go up a little bit further, had that negative divergence, and then we went through this consolidation period. Now it looks like it's trying to break back out again. But I see a stock like VEV and Etsy, when you pulled that one up. These are companies that I refer to as just simply the baby being thrown out with the bathwater back in December when the market was just selling everything. Because these companies really never came out. They never warned. They never said anything bad about their business. But yet we had a lot of sellers because the overall market was so panicked. And these are the companies that, as the market is strengthening, you're seeing the money rotate right back into some of those leaders.
You're absolutely right, Tom. And that is a dynamic that is taking place pretty much throughout the markets. So I talked about select consumer discretionary, and it's exactly the same case within technology. Those stocks that were doing well, those gaps up that you're referencing on strong earnings, that earnings power didn't go away, but the market's uptrend did. So very, very sound. You're right, Tom.
Well, I'm interested in hearing about Twilio, because this has been one of my favorite stocks, and the stock really is breaking out now. It's shown a lot of strength this week, and I know this was one that you plan to talk about. Do you have any fundamental information on the earnings and what's expected there? Because the stock's been performing great.
Yeah, actually, this is a company that the estimates are being revised upward, not only for Q4, but for 2019. And analysts are looking for 45% as far as earnings growth year over year for 2019. And again, that estimate just continues to get revised upward. This is a fan favorite, certainly among their clients that use the product, but also analysts on Wall Street. It's a cloud-based platform, and it helps companies operate communications, and it's really been well received. Again, as far as growing their client base, but also Wall Street analysts. And then one last other software name we can take a look at is Coupa Software. It's COUP. And this is another stock where the earnings estimates are being revised upward. The stock is poised to break out of a nice 3-month base. And also, this company is looking at estimate, again, they're being revised upward, but they provide cloud-based software for spend management. And a lot of corporations really are valuing their product because it allows them to sign up all of their vendors and really minutely be able to decipher where their spending is going so that they can reduce spend. And it's a very highly regarded product. Oh, it's up 16%. Actually more. It's probably up 20% now for the week.
Wow. Yeah, that's a huge week, and it took out this double or triple top too with very strong volume. So it definitely looks like some accumulation going on there. Definitely one of the hotter stocks for sure. How about the transports? I mentioned them at the beginning of the show, and I know I was a little bit, I don't know, taken back, I guess, because the group as a whole has not really bounced back as strongly as some other areas of the market. And I really wanted to see the transports doing well. But this is the IYT, which is the iShares for the transportation average. And you can see it is breaking up above that 50-day moving average that you follow. What transport stocks look good?
Yeah, and I agree, Tom. You want to see the transports do well because that's a signal potentially that the economy is expanding. There's a need to transport goods that are being purchased. So strength here is bullish, of course, for the broader market. So what we're seeing here, again, is earnings related. UAL is an airline, of course, United Airlines, Continental. The company came in well ahead of estimates, and this is in the face of rising oil. Of course, oil prices have gone down more recently, but last year we did see a big spike in oil prices. But the company, what they did is UAL moved into smaller regional airports in addition to their already established routes, and it's really been well received and has helped them grow quite a bit. Another airline is AAL, that's American Airline. This company actually is not going to look as attractive on the charts, and the stock has not reported yet. It did rally 5%, but they're due to report earnings next week. But we can see that the downtrend, the longer-term downtrend with AAL is still very much in place. And it'll be interesting to see, of course, how they report with their earnings, but not as strong as UAL. And then one last one, LUV in the airlines. This also is due to report earnings next week. Analysts are revising estimates upward, but another one where the downtrend has not quite yet been broken. I'd like to see it break back up above that pink 200-day simple moving average to get more constructive, but that's at 54, we're at 51, so we could see a rally up to that 54 level. Again, they're due to report next week. And then truckers, JBHT, Tom, you talked about this company earlier. They did beat on earnings and on revenues. But that said, we can also see going into that December low, really just how beaten down this stock got. And it did get very, very cheap on a relative basis. So any kind of earnings beat is just being applauded. And we can see that nice gap up today. So the volume is very significant. There's an anticipation of continued upside, again with an eye toward about 115, that 200-day as a potential area of resistance to the upside.
Yeah, and JBHT was one of those stocks you can see it was trading down quite a bit over 3 months and with very, very few bounces. I mean, it just all of a sudden looked like things were falling apart, not just for the company, but for the transports in general. And then all of a sudden we get the earnings report and they blew away top and bottom line. You get this huge gap up. It's up 6%, appears to be breaking the downtrend. You just, I don't know. I scratch my head when I look and see what we went through in the fourth quarter of 2018, only to see some of these reports come out in 2019. It's like, you know, we really didn't, we didn't really need to take that big of a drop, but
right.
We're trying to put the pieces back together as best we can. All right. Well, go ahead.
That's a great comment, Tom, because with Lululemon analysts coming, the management coming out and guiding higher has every analyst on the street scratching their head, because Lululemon came out in December and said we see soft sales going into next year. So it's not only us on the other side, it's management and Wall Street that's scratching their heads.
Yep, everyone's scratching their heads. Well, I do know that healthcare this time of the year tends to outperform. And also back, I don't know, a month or two ago when we were talking about the possibility of a bear market, healthcare in the past 2 bear markets has been, you know, really strong on a relative basis. So I was interested to see, you know, as far as healthcare goes, what stocks look good there to you? What's been moving?
Yeah, again, it's going to be earnings related, and it's healthcare providers. The big one here, of course, UNH. They're in the big component part of the Dow. And the company is up about 6% for the week. They're seeing growth not only in membership, but also in their premium returns. And this is another one you can see, Tom, it was a big winner going into that December correction. Very sound reasons, because the company was growing and those midterm elections did a lot for these providers. Another one in that space is going to be WCG. This one is up, I would say, in sympathy. They're due to report February 5th, but they broke above that 200-day simple moving average. So this one really looks quite constructive because it's a little earlier in its advance, forming potentially the right side of that base after peaking in prior to November. One last one is CNC. This is also a healthcare provider similar to United Healthcare, UNH. And CNN is also experiencing a good week, but all of that, they have not reported earnings yet, so it is going to be, they're due to report, and they're not quite as positive looking. So, but again, that's where we are this week, seeing strength there.
Does it bother you? I mean, some of these stocks, I mean, this one obviously is coming up and hitting the moving averages from underneath. But does it bother you on any of these stocks when you see the big gap downs on heavy volume and then you see the recovery back to those gap resistance levels on lighter volume? I mean, CNC is one of them, but I think one earlier that you talked about may have been, I think, Shopify, SHOP. Let me, yeah.
Oh
See
my
the
God. Yeah.
Yeah, this huge gap down on heavy volume in December, and then we make this huge move all the way back up to where the gap started. Does it bother you at all to see that, or do you only pay attention, or do you more pay attention to what's going on in terms of price relative to the 50-day moving average?
You just posed an incredible question. Those two, certainly Shopify. I have an investment, a newsletter that I put out. I have stocks that I recommend. Shopify has not been on my list since mid last year. I was pointing it out because it did gap up, and your observations are absolutely correct. Those breakdowns on big volume are not going to keep me interested. I prefer to see nice sound uptrends responding to good earnings and so forth. And then likewise with CNC, that is very clearly appearing to be a weaker name in an otherwise sound group. And this is not a stock I would touch, and that gap down on volume. So great observation.
Yeah, and I think, you mentioned the relative strength on CNC. I just wanted to point this out to everyone. Here is CNC relative to the healthcare providers index. So since topping on a relative basis back about 4 months ago, you could see the stock was doing really well, but it has failed to break out even though the healthcare providers group continued moving higher. So that's what Mary Ellen was referring to. It's just the group overall hasn't been that bad. It's strengthening, but CNC, while it has also strengthened on a relative basis, it's been in this downtrend for the last few months, and that's worth keeping in mind. All right, one more hot area, energy, and then we're going to take a look at some of maybe what didn't work in the past week. Probably not a whole lot there, but as far as energy goes, what have you seen?
Yeah, so what we're seeing is a lot of these energy companies, NBL would be an example. These stocks are responding positively to this nice uptick in energy prices. So $ WTIC would get you into that. But energy is not seeing a big plus this week. It's up probably about 1.5% on the week, but we can see it's just breaking up above that 50-day simple moving average. And yeah, Tom, perfect. So the group is continuing to turn, but it's looking ever so much more positive. So we can take a look at an NBL as an example. There are a couple of other names that are in this space that are also setting up nicely. And I talked about this before. When you see the price of oil going back up above that critical $50 level, a lot of times it's the exploration and production energy companies that are going to respond most favorably. And this would be NBL. Another one we can see it's just now inching up above that 200-day simple moving average and a 50-day on a positive fashion. COG is another example, and then we can move on. But this is another one. This is a little more constructive looking as far as the stock being a little further along in its advance. And so, again, these energy, the E&P guys are going to be a bit more responsive to that uptick in the price of oil. And this is another, yeah, so we can see that the stock has broken up above all of its key simple moving averages, and it's poised to break out of base. If we get up above that 27.5, that high back in November, that would be even more bullish. And we can see that PPO just bumping up into positive territory.
All right. Why don't we go ahead and head into the what's not, if that's all right? Because I know there's not a whole lot, but there have been some weak stocks. And I know the first one here, we've talked about this one on the show for quite a while, but you've got an electric utility I think just about everybody watching the show or who's been watching the show is familiar with. But what do you got there?
Yeah, we can take a look at P, G, and E, and you'll see really just how damaged this stock has gotten because of its potential bankruptcy. It has everything to do with the wildfires 2017 and 2018. And so the company is down about 65%. So we can see this huge, and it's down again another sour week, although it's seeing a bit of a bounce today. Another weak area has been housing stocks. And this is an area that's really started to turn and look potentially positive. We can look at PHM is Pulte as a prime example. And this is that nice turnaround. It was one of the, take a look at how well these housing stocks seemingly held up in December relative to the broader markets. And so there was a lot of hope, if you will, that they would come back, because this decline here in, for instance, Pulte was really there were sound reasons for it, because what happened is home sales were tumbling, inventory was rising. So the second half of last year was really tough for a lot of these companies. Investors thought, well, maybe they've gotten cheap enough, and they started ticking them up. But Pulte did come out with an announcement earlier this week that their sales were down. So and estimates are being revised downward for this particular company. We can look at DHI. And I know I'm running a little bit up against time, but you can really look at any of these housing stocks and you'll see that negative downtick there. One other area we can just very quickly, apparel retailers. I talked about that on the plus side, but there have been some downside names here. TLRD was down about 20% into yesterday, and we can see this gap up. I'm going to end it with this particular stock. I'm going to pull up a weekly chart here, and I wanted to point out to you a phenom. It's a chart pattern that not everyone may be familiar with, but it's called a hemorrhage with a wedge. And so what we see is this big hemorrhage down from 22 down to 18 here in December. This is a weekly price chart. The stock had a very significant drop here. So that's your hemorrhage. And then oftentimes you'll see what's called a wedge, where the stock back and fill. It can wedge sideways, upward, or down. And this is a sideways upward wedge. What happens 80% of the time is the other shoe drops. We have another hemorrhage down, and we're seeing that this week. This is Tailored Brands. They came out with poor news about their Joseph A. Banks, one of their subsidiaries, coming in with poor sales, so the stock is down again. So those of you, I want to thank you for hanging in there technically, but that's it for what's hot, what's not for this week.
Yeah. Wow. Okay. Take a breath. I know it's not easy going through all the stocks and all those different areas. Yeah, what you brought up there is pretty interesting. I had never heard of hemorrhage with a wedge, or whatever, hemorrhaging with a wedge.
That's it. Yeah. Mm-hmm.
But I think that Arthur Hill wrote about the S&P 500 kind of being, he didn't refer to it as a hemorrhaging with a wedge kind of a thing, but had the sell off. And he's been watching the wedge and the support line of this move back to the upside, thinking that if we break that, that could be the first signal that maybe the market's about to roll back over again within a bear market. It's certainly
okay. Yeah, I see that.
Yeah. All right. Well, we've got the 10 and 10. So I'm going to go ahead and put the first one up, which is Applied Materials. So let me get this one set up, and then we'll annotate it, take a look at it. Applied Materials is starting to look a lot better to me than it has in quite some time. And we've got obviously 9 other stocks that we will take a look at for the 10 in 10 today. But here is Applied Materials. And the thing I like about it is it's kind of got a small head and shoulder, reverse head and shoulder breakout today within maybe a larger one. And I'll show you what I mean here. And usually with these patterns, I like to use the black line. But let me go ahead and use the smaller one with the dotted line. And then I'll show you a potential bigger one with a solid line. But that would be your neckline. And then if I use black arrows to mark the left shoulder and the right shoulder. So here's your move down. We've been downtrending. We go down. We put in a left shoulder, neckline, lower low puts in the head, right side of the neckline, right shoulder, and boom. And it also held that rising 20-day. So this, to me, is starting to show a little bit more bullishness finally after a brutal 6 to 8 months. Applied Materials seems to be starting to strengthen. You can see the daily PPO is back above the center line. That's a good thing. But what I'm still a little concerned about is maybe a bigger head and shoulder pattern that could be lining up. And I'm going to use solid line here to signal what could be the left side of a neckline here, with this over here being your left shoulder. So you go down in the left shoulder, you rise back into the neckline, You go down to a lower low, puts in the head. This now could be a move back up to set the right side of the neckline. One more pullback maybe to the 20-day and then a breakout. And I think this bigger one is more impressive and easier to spot, actually. So this is something I'd look for. I think Applied Materials is going to run up to about that 38.5 area, and then we'll see whether or not we can continue to make that move. But if we don't and we pull back, keep this pattern in mind, because it could just simply be putting in a very, very important reverse head and shoulder or right shoulder pattern that could be underway here. So something to keep in mind anyway as we go forward.
Sure. And then MU, Micron.
All right. I think that Texas Instruments may have been the most popular, which is what we want to try to do next. So hold off on MU. Let me go ahead and pull up the TXN.
Sure.
Yeah, Texas Instruments is also strengthening, although we have a double bottom, but we don't have a breakout yet. This would be bullish if we can get this breakout. But there's your double bottom, and the line that I would be watching here is right there. So you clearly have your move down in October, set your bottom around 88. Here's your reaction high. You come back down, you put that double bottom in, so you're testing your support level, and now you're moving back up. I like the action holding the rising 20 and that 20-day getting through the 50, the daily PPO strengthening. I think all of those are good signs. I believe we're going to run up to this 102, 103 area on Texas Instruments, and then we'll see whether or not we can get through. So I'm still I think it's a little early to make that call that it is bottom. I think that breakout, though, above 103 would be very bullish if we see it.
Very good.
All right, then we got Micron. Is that
yes, you bet. MU is the ticker, of course.
All right. Big downtrend. I mean, this thing's been under fire for quite some time. It has not looked nearly as strong as many other areas of the market on this rebound. So if I just go through here and connect these recent highs, you can see it's trying to make a breakout here. If I actually get to the closing candles there and the close from recently, I think that's probably a better line. And we're still trying to break above. And the volume today is pretty good. 29.6 million. We just passed the halfway point of the day. So we're on pace to do, more than 50 million shares. So this is not going to be a light volume day. If you're somebody been waiting on Micron, I think buying it here with maybe a stop down around these recent lows, 32.5, 33. You could even use the 20-day moving average, which is coming up from underneath 34.11. Not a bad strategy, because Micron's been beaten up for so long. If it breaks this downtrend line, it could go on a run, no doubt. So definite improvement here on Micron.
Very good. HEAR.
All right, Turtle Beach, I think is here. Turtle Beach Corp. Nice move today. Looks to me like breaking this downtrend. First of all, you had a huge move to the upside. So I think the stock is the company's just trying to grow into its valuation. The valuation went up so fast. If I pull up the trend line here, and I would draw it right about there, you can see that today's action is actually breaking out above that trend line. I find that to be bullish. Also, notice the volume picking up. 1.4 million. This is already the highest volume we've seen since probably back in November. And again, we're just past the halfway point of the day. So barring some kind of a big reversal late in the day, I think we got a breakout here. I think HEAR looks good.
Wow. Yeah, I would agree with you on that one. NVDA, NVIDIA.
All right, NVIDIA. Another semi. We got a lot of semis we're going through today. Trying to strengthen. I know, Mary Ellen, you like it when we get through the 50-day moving average. I also like the positive divergence that we're seeing on the recent low. So normally what I do there is and remember, positive divergences are based on closing prices. So I would not draw the line from here, because that is the open. So instead, we should be drawing lines from closes, which would be right like that. And on that, you can definitely see a positive divergence. That's good news. Getting back through the 50 would be good. But normally what I see with a positive divergence is a trip up to test that 50-day and a test of the center line resistance area. And we're getting both right now. So I think NVIDIA still got some work, but definite improvement off of that positive divergence. I want to see a big volume breakout and eventually getting back through that 170, 175 area, I think would be really bullish for NVIDIA.
And then we have CRON.
All right, Kronos. Breakout. I've been talking about this one recently. This is, I think, one of the more bullish looking charts in the cannabis area. And Kronos, you can see with the equal highs, the rising lows, nice little triangle pattern. We're breaking it, and look at the volume picking up already. Again, highest volume we've seen probably over the last 6 weeks, and we're just past the halfway point of the day. Just like I talked about earlier, though, we don't want to see a big reversal. Look what happens when we leave these big tails to the upside, or we print these black candles off of uptrends. We tend to see weakness. So off of this uptrend, the last thing I want to see is a weak close today. But as long as it finishes strong and we've got the heavy volume, I think it goes higher.
And then ABT.
Abbott.
Yes.
All right, and that is in the pharma space. See what Abbott. I think Abbott's just consolidating. I think this chart looks pretty good, actually. Considering what we just went through, the fact that the stock, I think it's pretty clear we got to get through $74. But we just held a level right here at about 65. You can see that was the breakout back in August above this high. Went back, tested it, came back, almost tested it again in October. Another 2 tests in December and January. 65, you want to make sure that support level holds. That many tests, that would be big if it broke down. But currently off of an uptrend, sideways consolidation to me is bullish. I suspect that this is going to resolve itself to the upside. I would look for a breakout above $74. Need some increasing volume to confirm that move.
And then Tesla, I know they had news today. TSLA.
Yeah, they lowered something. What did they do? I saw that. I read that earlier.
Well, looks, yeah, their founder came out and said they have a tough road ahead of them. So Elon Musk.
All right. Yeah, the stock obviously getting hit hard today, down more than 10%. I've pointed this level out, but I think if you go back long term, 380 is a pretty big level in Tesla. We got up there, we tested it early December, fell back. We've rallied off of it. Now we've established what I think is pretty important price support low around 295. And the other level I would watch, there was a huge gap up with a lot of volume back in October. That was from this close at 290. So as we pull back, I actually think 290, 295 represents a nice entry into Tesla if this weakness continues.
Great. And then Netflix, NFLX.
Great. Yeah, I talked a little bit about Netflix earlier, but let's just take another look at it here. And I'm going to pull it up on the weekly chart just so we give it a little different view. This is one of those stocks that did clear that 20-week moving average. We've been talking about, well, will the market be able to clear? Well, Netflix already has. So one thing that I would pay attention to if I was in Netflix, if this is truly a market that's going to continue rising, Netflix should not go back down below, at least shouldn't close on a weekly basis, back down below that rising 20-week moving average, which is now down at 308. So I would watch that level pretty closely. Nice volume coming in on this move back to the upside as well. So Netflix looks to me like it has maybe some higher prices ahead.
Yeah, nice PPO there too. DRI.
All right, DRI, which is Darden. Yeah,
Darden Restaurants, yeah.
In a great space, and I love this recent test of price support. So this will be a good one to end on. I think this was number 10.
Yes.
Right here, you can see the breakout. Look at the volume. Mary Ellen, you talked about this earlier. I mean, when you get these breakouts above key areas, you like to see that volume bar to suggest some accumulation. We got up to about 120. We're overbought. You can look down here, see the RSI was over 70. I think we just simply consolidated back to test this breakout level and now starting to turn back up again. As far as levels, I think that we're in a trading range. So I think maybe 95 to the downside, closer to 120 to the upside. Look at that PPO, though, come right down to the center line and turn back up. And you can see what happened last time it did that. Big move. And you can see here, after coming down, consolidating near that center line, big move. So I think this looks pretty good. I would not be surprised, especially, again, if the market continues to strengthen. I suspect we'll be seeing a breakout sooner rather than later on DRI. All right, and that is the 10 in 10. So We got
Very
10
good.
stocks. Tried to get through in 10 minutes. Didn't quite make it, but got close. Not bad. Not bad. All right.
I'd have to say very good.
All right. I appreciate that. You have no choice, though. I know you're just buttering me up here. All right, let's get into the final market update. I'm going to take a little different look at the market because we are continuing to move up. Actually, let's go ahead and just take a look at the major indices first. So let's do that just at the home page here. The market overview, you can see the Dow. We have been on this steady move to the upside. This is looking really bullish, like a trend day to me, unless we get a reversal this afternoon. Going through a 20-week moving average with this kind of a day, it's hard to be bearish, that's for sure. And as I mentioned earlier, I wouldn't even think about shorting until I see a reversal. That way, at least if you reverse, you know where you want to get out, because if we go back up and take out the intraday highs, that would be above the 20-week moving averages, so that's what I would be looking for. But currently, as we go through these major indices, the S&P straight up, NASDAQ straight up, Russell 2000, a little bit choppier, but still, actually, that's not showing current. I think this one's been pretty much straight up as well. So all of the major indices performing really well. Let's take a look at that sector summary and get a quick look at what's going on and the makeup of this rally. Industrials and materials continuing to lead to the upside. I want to mention materials. I wrote about this, I think, in today's blog. But 2 days ago, I pointed out that materials, if we truly were strengthening and going to continue to strengthen, that this test off the 20-day moving average was pretty important for materials, and even suggested from a long perspective, the reward to risk was solid, because you really don't have to give a whole lot of room. If you're following this moving average as your trend support to the downside, testing the 20-day is generally pretty good indication, at least if it's successful, that we're probably going to go higher. We're getting that move to the upside in the materials, and now we've got this double top up here, closer to 55.5, 56. That's what I'd be looking for there. Getting back to the industrials and taking a look here, you can see the breakout above the 50-day moving average. Again, that's a level that Mary Ellen likes to watch closely. And on this particular chart, look at the move up. This is like a flag pole and then a flag sideways before another push back to the upside, which we got yesterday. You can see the volume come in to support that move. It's just looking a lot better. And sometimes I know in a bear market rally, you can get these tops just when everything starts to look perfect. So we do want to at least be vigilant about watching for possible reversals. But I think the XLI, if I annotate this, we've got the 20-week moving average and we've got trend line resistance. And we've got that across a number of areas of the market right now. So yes, short-term things look absolutely peachy, but things can change. We saw how they changed on the bottom. They also can change on the top. So let's, again, be vigilant. Let's watch, make sure that we don't see some kind of a big reversal later today or early next week that might signal that we put in a short-term top. Other than that, I'd say the action here is pretty good. Getting back to that summary, you can see all 11 sectors are higher today. So that's another thing that I think is really important, because it's telling us that we've got wide participation on the move. Nothing is being left behind. And what is underperforming, you can see the 4 groups: consumer staples, healthcare, real estate, utilities. Those are all your defensive groups. The other thing, as I pointed out at the top of the show, normally what you would expect, or things that might concern you, would be a big reversal in the TNX, because any kind of a move higher in the TNX tells you money is coming out of treasuries. But if we were to reverse, go back down and close back at the 20-day or below and leave a long tail to the upside, that would tell you that traders are rushing back into treasuries later in the day. So again, something to watch, but the fact that we've broken out above the 20-day, I think, is just one more bullish signal that we are seeing in the market currently. Finally, let's go back to the main page. And for those of you maybe who are not familiar, I just want to go over these scooters. If you want to know, Mary Ellen went through earlier what's hot, what's not. Another way to do this on your own is using the scooters and the changes on the top up and top down. So for instance, if you're looking at the small cap stocks and you get into the scooters, and these are just drop down menus here that you can put in what you want. But taking a look at this, here are some of the stocks. And we mentioned here was just one of the stocks that we went over in the 10 and 10. And there it is, the second one. So if you were wondering, well, how do I find a stock like HEAR? Well, the scooter would have told you, looking at this update. Taking a look at the large cap and the mid cap, if we do the top ups, you can see VFC, which is one of the stocks we talked about with earnings. JBHT, same thing. And then you got a couple big semiconductor stocks that are making a move today, probably worth taking a look at. And then here's your mid cap stocks. And if you're looking, okay, well, I'm not really interested there. What about the shorts? What's not working today? Well, you got those two. And Tesla, which we talked about, the scooter rank has dropped 64 points on that move today, which would have gone from 87 down to 23. That's a pretty big move. So if you're not familiar, and here is NLS, the one I talked about earlier that warned, fell from 42 to 2, showing obviously a lot of weakness there in that stock. So you're really doing yourself a disservice if you don't check out these technical rankings and use the scooters. I think they can lead you to some great opportunities as a trader, and potentially give you some good long-term ideas as well. All right, that is it for the update for today. We're going to go into our final segment, and this segment is a new segment. It is "'Tis the Season" with a question mark. And what we're going to do here, I'm going to show you actually the article that I wrote in my Trading Places blog. And it was right here just a couple of days ago. This would have been back on Wednesday. 10 S&P 500 stocks that seasonally outperform from February through April. So if you go in here and go down under my historical tendencies area of my blog article, you'll see the 10 S&P 500 companies that tend to do really well seasonally. And okay, you might say, well, what does that mean? I don't even understand seasonality. Well, if you go in here and let's just pull up, well, let's first go into seasonality. The first stock that was on that list was BKNG. That's Booking Holdings. Well, if we pull up the seasonality, Booking, coming along here and looking February, look at this spike. 84% of February's Bookings Holdings has gone higher over the last 20 years. Here's the 20 years. Now you can grab this slider and you can do anything up to 20 years. So you can just go back to last year, last 2, 3, 4 years, whatever. But over the last 20 years, I like to get the sample as large as possible. I think that's more representative. But here with Booking, you can see 84% of February's has risen, and February has averaged going up 8.6%. That's a good annual return. That's what the average has been on Booking Holdings over the last 20 years during February. And look at these numbers following it up. March and April, 8%, 8.4%. Add those three together, 25% Booking has averaged going up during the months of February, March, and April. Maybe looking at another one, let's take a look at the next one on the list, CBRE. And don't worry, Mary Ellen, I got something coming for you. I got some questions for you.
Yeah, and then maybe we can review how people can get to these stocks.
Yeah, and so CBRE, all right, February 2.4, March 9.1, April 7.0. Now, this only goes back the last 16 years, but you can see, again, a lot of seasonal strength in this stock this time of year. Now, I wouldn't personally look at this and say, oh, I'm going to rush out and buy BKNG and CBRE because Tom said that their seasonality is great in February and March, but I would be aware of it. And if you start to see technical reasons to buy, as far as I'm concerned, the seasonality just adds more fuel to the fire, if you will, as far as just confirming from a seasonal perspective what you're seeing on the charts. So I'm going to give some of these names to Mary Ellen. And I don't know if you've got your charts up, Mary Ellen, or I could continue doing this for you. But
I do, yeah.
You have the charts?
Oh, well, I can pull them up, but no, we can. Yours is perfect. Yeah.
Great. I'm going to give you the 200-day on here, too. So let me just put that in here. I know you like the 200-day.
So accommodating.
I try to be. Some don't appreciate it as much as others, so I'm glad you appreciate it.
I do.
And I know you use the MACD, but PPO is basically the same thing, so I'll leave that there. Mm-hmm. So now let's look at the charts. So all of these stocks that I give you, Mary Ellen, are all stocks that do well seasonally. So what I want you to tell me is when you look at the charts, do you like what the setup is? Maybe going into some of your recent fundamental data that you like to share with everybody. What do you think of booking here?
Well, I don't love it. And you can see that a lot of those key longer term, the 200-day simple moving average, the 50, they're still in downtrends. So once you do potentially get the price breaking back up above around that 1800 where the blue line is, ideally you want to pull these simple moving averages so they are in an uptrend and the stock's price is finding support at upward trending simple moving averages. So we can go back to the end of September, November, where these downtrend reversals have failed. But we can also take a look at the company's earnings estimates. They're being actually revised downward for 2019. So on January 9th, two large Wall Street firms downgraded the company's outlook. And booking, of course, BK&G's the old price line. They're making a big play for China. And China is still a big question mark. I know they had pretty good news recently about their potential turnaround economically, but interesting to see that that's their next continued big focus and growth is China. So, but technically, I would like to see the stock come up above again those simple moving averages to potentially reverse this downtrend that we're seeing.
Yeah, and you made a couple good points with the moves back at the end of September and also early November. On these moves, notice you moved above a declining 50-day, and you were talking about pulling that moving average up, but they never did in those instances. The 50-day continued at best to go sideways. The strength didn't continue, and then we went right back down. So definitely there's reason not to trust this move technically just yet. I agree with you. Mm-hmm. All right, let's go on to CBRE. This is a stock that also I just pointed out, very strong seasonally. What are you seeing here?
Yeah, so this is a real estate development operations company. They're based here in LA, and the company, we are seeing estimates revised downward again for this year on the company, and they're looking at single-digit 6% earnings growth, so not that dynamic. Technically, things are brightening. We can see that shorter term 20 green line EMA poised to cross above the 50, the blue line, the 50-day. That would be called a bullish cross. But again, we're really going to be critically paying attention to that 200-day. And I can see that the PPO on the up is turning up above that net neutral zero. So that's constructive. So ideally, and we are also breaking out of a base. We can see the stock hit a December, the very beginning, near-term high. We're breaking above that today, but ideally, once we break above that 200-day, the stock certainly would get more constructive looking and more, upside.
Okay, let's take a look at, now I didn't show the seasonality, so everyone's just gonna have to trust me that it's good, but let's take a look at PXD, and this is Pioneer Natural Resources. So this is another one that is going into a bullish period. What do you think here?
Yeah, so PXD is one of those energy companies that's going to respond nicely to the continued uptick in oil prices. And so technically, yeah, we're seeing it's just now breaking above that blue line, that 50-day simple moving average. And it could potentially trying to reverse that downtrend. I'm a little leery of oil stocks, energy oil related stocks personally, just because of the inherent volatility. But technically, this one is setting up, you're right, Tom. It's getting certainly more constructive.
Yeah, and I think the pattern here, nice little move higher with the overall market continuing to move higher, energy continuing to move higher. We really seem to be stuck in this little flag pattern and not unable to break out. So this is one maybe that if we could get some volume coming in on a breakout above, say, 146, 147, that might add a little technical fuel to the fire, if you will. All right, how about, I know you know this one, big software company, Adobe Systems.
Yeah.
What do you hear?
I love today's action. It's turning positive, and maybe we can pull up a weekly on that. Adobe, interestingly, I'm wondering why a software stock, I don't know if it's random or if there are a lot of other names that are have a seasonality of potentially doing well in February. But analysts are revising estimates up for this company, 15% this year, 24% the next year. And looking at this on the weekly, we can see that nice potentially forming the right side of a base, because ideally we want to get back to those September highs when software stocks were really powering, and they were the first to deteriorate prior to the broader markets. But we are seeing other big, CRM is a prime example of another big enterprise software. These are companies that get monthly income regardless of the economy. They have these contracts. Sometimes it's annual, but it's viewed as recurring income, and it's the growth prospects are really quite strong. So Adobe looks good.
Okay, definitely strengthening on that weekly chart for sure. All right, let's get back. We'll take a look at, what was the next one here?
MGM, maybe?
Yeah, MGM. Hey, you reading, Emma?
Yeah.
What do you think?
Yeah, so we can see that technically it's still fumbling a bit here. This is a company that they're the largest casino operator in the US, but they also have a presence over in China, in Macau. And so they're really building a big, huge sports betting empire. It's going to be larger than their casino operations, and the timing's perfect given that it's now legal and it's state operated. But technically, the stock still has work to do. Again, I'm going to be diligent on that 200-day, because that can really act as a ceiling for a lot of stocks. That's that pink line. And yeah, Tom, I can see what you're setting up there. Go right ahead.
Yeah, I was just saying, or just pointing out the overhead resistance. I mean, we've tested since September. We've been in this 28.25 to 28.75 area. One time, 2 days there, a day here, another day here. Tested the bottom of the range here. Big failure there. And again, there's that long tail where it looks like we're making a breakout, and then we fail, and then we really struggle. But I like the pattern here. So if we can get that breakout, I agree with you, Mary Ellen. If we can get through that pink line, we're also breaking out of a pretty strong flag where we've got the flagpole followed by flag, or maybe you could even look at this as a cup off of that uptrend. Either way, a break above about 28.75, in my opinion, would be pretty bullish here. All right, we're going to do another one here. XEC, another one that historically has done very well February through April. So what do you think from a technical perspective?
Yeah, Cimarex, and I'm going to sound like a broken record, but we can see that the stock is attempting to reverse a downtrend that really began back in October when it peaked, and that has everything to do with the price of oil. The stock's declining since then, but we can also see the downtrend reversal attempt in November, then again in December, really being met with resistance. But we are stabilizing. That blue line, your 50-day simple moving average, at the very least appears to be leveling off, and that's constructive. Certainly better than being in a downtrend. So ideally, if the stock breaks up above that blue 50-day, then we have the shorter term trend up through it. That would really be quite bullish.
Yeah, and you can kind of see, again, if I drew some lines in here, we broke down at about 77.5. And you've also got some gap resistance up in the upper 70s as well. So this is going to be, even getting through the 50 obviously would be one important hurdle. And we do see the PPO moving into positive territory. But that area of resistance, overhead resistance, is going to be there. And as you pointed out, in November, we went right up to the 200-day moving average and then fell off of it. And that 200-day, even though that would be a nice gain from here, there's still a lot of work, I think, to do for this stock to look really good from a technical perspective. But still, we do have that seasonal bullish bias behind the stock. Now, the next one I bring up, this one could be, you may not sound like a broken record anymore.
That's right.
Foot Locker. What do you think?
Very good. Yeah, and if it's not too, I don't know if you can pull up a weekly on this fast, but this was a stock that has, with fits and starts, it was a big winner last week. Of course, they are big in footwear, athletic sneakers, big industry. So we can see the stock is potentially breaking out of a very nice base that would take us back to June. And then now we're breaking back above that June high. So we have that nice saucer formation, stock poised to break out. Currently, the current stock price to break out above that June high. And I talked earlier about the concept that the longer your base that a stock breaks out of, historically, the longer your advance out of that base potentially could be. And of course, we are going to want to see numbers to support that. Analysts are raising estimates up. We're looking at 14% on the earnings growth for this year and single-digit 8% for 2020. But if we continue to see estimates revised upward, we could see a nice move here.
Yep. And I just want to point out here on the weekly chart, the hemorrhaging wedge.
Yes.
Down here back in May and
Yeah.
June 2017. Yeah. And then you kind of see that sideways action that you referred to, and look what happened.
Another hemorrhage. Perfect.
But now we're going to go in the other way. So we got the big move up, little consolidation, another big move up, consolidation. Could this be the next move up? Looks pretty good to me.
It does.
All right. Let's take a look at, we'll start with the weekly on this one. CMI. This is Cummins. What do you see here?
Yeah, so this is going to be energy related as well. They manufacture engines that are used in oil and gas mining and equipment manufacturing. And we can see the nice move this week, almost 8% on the uptick. Not quite sure why. Analysts are revising estimates down for this year, 2019. But that could have everything to do with energy oil pricing. We are seeing this nice broadening out into the materials area, which is also industrials, which is going to bode well for the broader market's continuation. So this is part of that move into the materials sector. And technically, I'm sorry, it's breaking back up, and it does look constructive. We're getting nice volume, but we can see that there was an attempt there in November that, of course, failed with the broader markets. But a little more work here. We could get
yeah, I like the fact that you can look back. I know this is a weekly chart to the 200-week moving average, but still 3 different times we've gone down. Looked like we were about to break down pretty seriously, and we held. So off of this huge move to the upside, it seems like we're consolidating. I agree with you. A break above about that 156 area would be very constructive on this chart. Okay, we got, I'm going to see if we can squeeze in 2 more really fast.
Okay.
Would be the last 2. PVH, this is a weekly. What do you see here?
Yeah, actually, on the daily, it's going to be a little more interesting, potentially reversing the downtrend. This is all the Chinese tariff related. This is an apparel manufacturer, and they're really getting hit hard with the tariffs and the potential tariffs. But news that could be the pressure there on the tariffs again is lightening up. Analysts are revising estimates up 20% growth for this year. And on the daily, we can see that price break above that 50, potentially a move from 110 up to 135, that 200-day.
Yep, and it looks like that downtrend here may have broken too with this move. And I always like to see that rising 20-day tested and hold. And we saw the big, I forget, there was some news out when we had this gap down on PVH back a week and a half ago. But we held that 20 and we broke to new highs. I think when you start getting bad news and the stock holds key technical support levels, I think that's a good sign. So we'll see if we continue, but just keep in mind February through April, very strong. All right, last one we're going to take a look at COG, and you can see very strong here of late, holding on to that rising 20-day. Anything scare you here, or you like this one?
A little too volatile for my blood. I'd like to see a little more concise trading, but again, this is going to be oil and gas related. So, but it's in a near-term uptrend, certainly big growth prospects for the company, and I ideally would like to see a break back above that 27.5 to certainly a new high would be compelling, but that volatility recently would lead me to look elsewhere, but certainly you need to take that seasonality into effect, right?
Okay, well, especially if we get breakouts. I mean, if you're starting to like charts technically, just keep in mind that those 10 stocks we just went over, and you'll see a summary here in just a second. Those 10 stocks are really important because we know that they are among the best seasonal performers February through April. So if we get tactical breakouts, it's just giving us a little bit more confidence for those trades. There are the symbols for the new segment that we went over. And when you do fill out that survey at the end, I'd like to hear what you think of Tis the Season. I thought it was kind of an interesting segment, taking a look and combining a couple things here at Stock Charts, along with getting Mary Ellen's expertise as well. I thought it was a fun segment. Okay, let's go ahead and bring up the poll. And this was a poll that we had running during the show today, basically talking about seasonality. We brought it up a couple of times now. We brought it up a number of times in the show, but we talked about it a couple of times today. I'm going to give you a little bit about January effect on Tuesday. Make sure you tune in for that. So the overwhelming majority say that they refer to it occasionally. 22% never used it. I hope after today, maybe you'll start to at least take a look at it. 16% try to review it before each purchase. Only 3% say it's my go-to, I always use it. And 2% wondering what the seasonality tool is. Hopefully that's been answered now. But I would say for me, I'm embarrassed, but I'm going to go with the majority. I'm going to say I've referred to it occasionally. I don't always look at it. I really should be in the, I try to review it before each purchase, but I'm not. I'm in the occasional. And I know this is something you don't really use that much, is it?
You know, I don't, but I did want to remind viewers that it also can be used for sector analysis and certainly the markets as well as individual tickers. And I find it to be really useful there as far as predictability, because there is seasonality as far as the bigger picture as well.
Yep. I do want to mention in our upcoming schedule that you will see the 2019 market outlook coming out. A number of us commentators giving our thoughts on what we see coming up in the market for 2019. So check that out for sure. I want to thank everybody for being with us today. Always a pleasure to have you in here. Please complete that survey as you get an opportunity. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe. See you back here on Monday or Tuesday. Happy trading.
Hi, this is Arthur Hill, Senior Technical Analyst with StockCharts.com, and today we're going to cover candle glance charts. Here are the topics and the timeline for today. First, we're going to show you where you can access candle glance charts and how to create them. We'll go over the candle glance controls. We'll show you how easy it is to customize the indicators and change the duration. Then we'll take a chart list and show you how you can view that as a group of candle glance charts. And finally, we'll show you how to create a custom candle glance chart style. Creating candle glance charts. There are a number of ways to access the candle glance chart feature and create candle glance charts. I'm on the free charts page, and you can see at the top we have the main sections of the StockCharts website, and there's the link to the free charts page. On the right side of this page, you can see we have a link for candle glance charts. If you scroll down towards the middle of the free charts page, you will see a candle glance groups section. And you can enter up to 12 symbols there in the symbol entry box and click go to create a candle glance group. Or you can select from the predefined groups that we have. You can also find candle glance links on your members page. So if you click the members link at the top, you will see you have a control center on the left. And if you scroll down to the charting tools, you will have a link for candle glance charts. Candle glance controls. This is a candle glance group for the 30 stocks in the Dow Jones Industrial Average. And the controls can be used to customize these charts. At the top, you can see all the symbols that are currently shown. Then we have the chart duration. So I can click that drop down to change the duration of the chart, and I can even change it to a point and figure chart. I can easily add an indicator to all these little candle glance charts, such as MACD here, and I can change the settings as I like. You can even sort by that indicator. If I sort by descending, when I click that, it'll refresh, and I will get the stocks with the highest MACD value at the top and the stocks with the lowest MACD value at the bottom. At the bottom, you can see all the symbols that are shown in the symbol entry box. You can change that, and you can enter up to 12 symbols separated by a comma for a custom candle glance chart, or you can select from the predefined groups on the right. Customizing indicators and duration. The default setting for the candle glance charts is for 2 months, and you can see there are 2 moving averages as well, a 20-day moving average in blue and a 50-day in red, and you've also got some volume. Now these are clearly for some short-term analysis because they only go back for 2 months, but you can also do longer-term analysis and say make a cut. In other words, you've got a bunch of stocks here, 30, and you want to get the top 10, say. And the way you could do that would be to go to 1 year on duration. You'll get a refresh and you'll get a 1-year chart. And you can see which stocks are clearly in uptrends and which may be turning around here like Chevron. You can also add a relative performance indicator like the scooter. And if you add the scooter line and then you sort by descending here, then you will get the top scooters at the top. So if you wanted to focus on the top 10 stocks in the Dow, you would see them at the top here by sorting by the scooter. Viewing chart list in candle glance format. StockCharts users can also view a chart list as a candle glance group. So here I am in a chart list called Stocks, NASDAQ 100. And if I click the View All link, I will get 10 charts per page. And then up at the top, I have View List As, and I can select from that drop down there and choose Candle Glance. And then I will get 30 charts per page, and I can customize this page using the options at the top. Chartists can also view a chart list in Candle Glance format by going to the Members page. So here I am on the Members page, and if I go to my chart list, by clicking that link, I will be taken down. And there you will see all of your chart list. And I have a View List As drop down, and I can choose Candle Glance from that drop down to see that list in Candle Glance format. This is very handy for scrolling through dozens of charts in a short period of time. Creating a candle glance chart style. Most indicators are available on the standard candle glance workbench here, but if there's a particular indicator that's not on there that you want to see, or if you want to change the chart style that you're viewing in the candle glance format, then you can create a custom chart style for candle glance. And so I'm going to go down here and click on the Amazon chart to open it up in the Sharp Charts workbench. And what you would do is set that chart how you would like to see it as a candle glance chart. So here I've got a 9-month bar chart with the 50-day moving average, the 200-day moving average, and I added the Chan trend meter because I want to see that on my candle glance charts. You could also add the RRG indicator or any other indicator that's not shown on the standard candle glance workbench. So once I've done that, I need to create a chart style called Candle Glance. So I will click the Add New link and I will go Candle Glance. And then I will add that chart as a chart style. So now when I go to View All and I choose to view the list as Candle Glance, all these Candle Glance charts will now show a 9-month bar chart with a 50-day and a 200-day moving average and the Chan trend meter. And again, this is very handy. It makes it very easy to scroll through dozens of charts and quickly see setups that you want to investigate further or that you want to pass on. And just one note, when you're using a custom candle glance chart, you will not be able to sort by that particular indicator. And that concludes this instructional video for candle glance charts. Be sure to check out our other instructional videos, and thanks for watching.
Here's how to add a moving average for the volume on your charts. You can't use this volume component here, so go down under Indicators, select Volume from the drop-down menu, and then put the period that you'd like on it, and you can specify the color of the moving average line. Click Update, and that will give you this nice little line on here so you can see if it's above or below average volume.